you owe money to the IRS but can't pay it, an offer in compromise is one option to consider. Visit the Taxpayer Advocate Service's Tax Toolkit website for detailed information. But for now, let's take a quick look at this option. An offer in compromise is an agreement between you and the Internal Revenue Service where you offer to pay less than the full amount of the tax debt you owe. The application process is very involved, with strict terms and conditions, and is not for everyone. So be sure to explore all payment options, such as an installment agreement, before deciding to file an offer. Before applying, determine your eligibility. If you are in an open bankruptcy proceeding, you are not eligible to file an offer in compromise. If you can pay off what you owe through a single payment or an installment agreement, you may not be eligible unless exceptional circumstances exist. IRS.gov has an offer in compromise pre-qualifier tool to help you confirm your eligibility, as well as help you prepare a preliminary proposal. Before the IRS can consider your offer, you must be current with all filing and payment requirements. This means filing all required tax returns, making any required estimated tax payments for the year, and, if you're a business owner with employees, making all required federal tax deposits for the current quarter. When you file an offer, the IRS will review your application, your ability to pay, your income, your expenses, and assets. Generally, collection activities will be suspended while your offer in compromise is being considered, but penalties and interest will continue to add up. The IRS may also file a notice of federal tax lien, which is a legal claim against any property you own in case you fail to pay your tax debt. There are different types of offer in compromise agreements. IRS.gov has a Form 656 booklet to help you determine which type is best for you. The type of offer you file determines if you will be required to send in a financial statement, as well as an application fee and initial payment, which will not be refunded if your offer is rejected or returned for any reason. If you meet low income requirements, you may not need to send in the fee or initial payment. After the IRS has reviewed your application, they will either accept, reject, or return your offer. If accepted, your entire debt is considered resolved, as long as you meet the terms of the agreement, which includes staying compliant with your tax obligations for the next 5 years. If rejected, you will be given instructions on how to appeal the decision. If your offer is returned due to missing information or because you're not current with all of your filing and paying requirements, you will not be able to appeal. Contact the Taxpayer Advocate Service immediately if the IRS takes collection actions other than filing a notice of federal tax lien after you've submitted an offer in compromise. Visit our tax toolkit at taxpayeradvocate.irs.gov for detailed information about the offer in compromise option and your rights as a taxpayer. The toolkit also has information on low-income taxpayer clinics if you need representation before the IRS but can't afford it. Taxpayer Advocate Service, your voice at the IRS.